Hello, everybody. This is Dave Gilreath from Sheaff Investment Advisors. Remember, we're the firm that uses innovative portfolios for intelligent investors like you. So today we're going to talk about the stock market, and we've had a nice run off the bottom that was hit in October, and now here we are in August, very early August. And now what is ahead? There's mixed signals about what's ahead. So we would like to talk about what might be ahead and just show you a few slides here that we've put together in order to, who knows what's ahead, but at least we could try to predict a few things. So the bull has awakened is what we like to say. So now what? So this is a chart that shows bull and bear markets that go back a number of years, and the bull markets are in the yellow and the bear markets and the corrections are in the other colors. The pink and the kind of light, I guess, purplish kind of color. But anyway, in the green box, that's where the stock market bottomed out in October and now has recovered a fair amount of what was lost. Not all of it, but a fair amount of what was lost. So the last bear market that we went through was a little less painful than the normal, although almost the exact same length. And some people say the bull market started in October, like this Edgar Denny that I just looked at, the chart. Some people say a new bull market doesn't start until right here. It begins when the closing price gains 20% from its low, which it did in June. My point is, who cares what difference does it make if it started in October or started in June? On average, the bear markets go down 35%, but this most recent one was only down 25%. And then the bull market gains back 3 to 4 times what was lost. And the average bear market is 292 days going back in history. And this last one was 282, so almost a textbook example. If the next bull market is a textbook example also, then that should last until July or so, the summer of 2025. So there is a lot of varied opinion out there. Everybody's saying, well, how long is this going to last? Some people are optimistic about it. Some people, like Bloomberg, says there's too many bullish people, so it's going to put it at risk. Other people, the Dow theory says we're off to the races and the thing's got legs. But who knows? And some of that is due because there's a lot of mixed economic signals. In other words, like the yield curve, which is inverted still, that's a negative. Inflation is coming down. That's a positive. The PE ratio of the S&P 500 is very high. That would be a negative. Leading indicators are a negative. Auto sales, positive. But loan rejection rates are going up. So that's a negative. So there's just mixed signals on the economy. Now, you have to remember, economic numbers are backward looking, whereas the stock market is forward looking. And don't ever forget that. So this is a chart, a logarithmic chart that goes back to about 20 years of the stock market. And you can see I've drawn a green little dotted line from the beginning to where it is right now. And for the Dow to get to go up to 50,000, let's say, in the Dow, it seems ridiculous right now, but we'll talk about that in a second. The S&P would have to get to 6,500 in a couple of years, which is right here about, which isn't too far from that green line. I mean, the green line could intersect that. We might have to have a couple of good years, but nonetheless, it certainly could do that. But you can see here this brown dotted line at the top, that the market's basically been stuck in neutral, stuck in the mud, I'd call it, or treading water for about 2 years now. Now, this has happened in the past. In fact, in 2019, in June of 2019, we did a newsletter when the Dow had been stuck at 26,000. It couldn't get above 27,000. It had been stuck for about 2 years. And we made the point in the newsletter, well, it could go to 30,000 within a year or two pretty easily, and showed 3 different examples. One was in 2004, 2005, right here, when the market had been stuck for about 2 years and then all of a sudden went up 25%. And then in 2011, 2012, same thing happened, was stuck for about 18 months and then went up 35%. And then the last time in 15, 16, when the market had been stuck at 18,000 and then blasted up 45% in a pretty short period of time. So in June of 19, when we put this newsletter out, the Dow was at 26,150, couldn't get above 27. And we made the point, hey, in a year or two, it should hit 30,000. Well, we came oh so close. The market took off, and in February of 2020, we had the market was at 29, the Dow 29,400, and then you may or may not remember we had this little problem called the pandemic, and the market had hit a bit of a roadblock and then came back up. But by November 2020, less than 18 months later, the Dow did hit that 30,000 level. So at the end of 2020, we did a video just like we're doing today called the Roaring 20s Dow 50,000, making the case why the Dow would get to 50,000. And we cited a couple of examples. One was when I started in this business, the Dow was at 875, that had almost never been above 1,000. And all of a sudden, tax policy changes, global trade starts going and computers get invented, things like that. And all of a sudden, the Dow doubles, goes to 1,750. And then lo and behold, it doubled again with the 3,500, and then 4 years later, doubled again to 7,000. Then a decade later, another double, and then here 13 years later, we're at 28,000. So my point is, at some point, it's going to get to 56,000 because it's going to double again, because that's just the way capitalism works. And so we've said in newsletters all along for many years now, we've made projections of where the market should come or should be by a certain time. And the most recent one was here, 50,000 by 2027. So about 3.5, 4 years from now. Now that brings us to today. So here we've been treading water for 2 years again, just like in the past, we have in the past. Could it be 50,000 in 3.5 years? Yeah, I think it could. I mean, some good things would have to happen, but I think it could. I mean, we've seen it before, but we've had a nice run. So got to be careful. The market it could be in for a little bit of a choppiness by late summer, which is not uncommon to have some choppiness. This is a chart that shows monthly returns all the way back, what is that, 30 some odd years. And you can see that August and September that are circled here have the worst months. So don't be surprised if late summer we get a little bit of a pullback, but if the Dow's going to hit 50,000 in 3.5 years, what difference does it make? Thanks for visiting. We'll be with you next time. Bye-bye.